Hello, welcome to another trade recap. So this trade was taken on April 21st on Tuesday. We had two red folders, one at 8:30 and the other one at 10 a.m. Now, moving on to the charts for a higher time frame bias. So I usually don't have a bias. I just set conditions on the basis of which I decide if I have to take a long or if I had to take a short. Now, based on the 4 hour, you can see that we swept the all-time highs on just 100, but on just 500, we did not. So we had this bearish SMT. But what was my condition? Now, moving on to the 15-minute chart, this 15-minute gap was my condition. So after sweeping all-time highs, US 100 created this bearish 15-minute gap, and this was my condition. Now, if I was to be bullish and target these all-time highs, I needed the market to disrespect this 15-minute gap towards the upside. And if I had to take a trade bearish, this was to be respected. And why would I take a trade toward the downside, you would be asking? Just look at this engineered liquidity. Just look at this. This London low, this Asian low, another Asian low, midnight lows, and this beautiful low resistance liquidity on the left side. It all made sense for the market to come down, because why would market want to create all-time highs, leaving all of this generated liquidity and low resistance liquidity to the left side? So I was more bearish after seeing this structure on the 15-minute, and I was in my mind that if I had to take a long, I would risk low because of all of this liquidity to the downside and my stop loss being just above these lows. So let me go down on the lower time frame. So what happens? As market opens, what we do? We generate more low resistance liquidity on the 5-minute time frame. Just look at this. This liquidity is just below this 5-minute gap. I have not marked that, but you can see that gap. You create this low resistance liquidity, and then we move down straight towards these lows. We eat a lot of this liquidity on the left side. Now I can take long. Why? Because most of this liquidity has been taken. Now people would be like, why didn't you wait for the market to take all of these lows? Because this is not how the market works. It does not need to take all of this liquidity down here to go higher. So I was in my mind fixated on this 5-minute now, because this was my updated condition. Now, what were my draws on liquidity to the upside? I had this low resistance liquidity, and I had these data highs, 8:30 data highs. These were news highs. Plus I had all-time highs above. Obviously, I would not target these, but these data highs were there. Now what happens? You see, we take out these highs, but let me break down my trade. So as market comes down, it takes all of this liquidity. This creates two gaps. Now market consolidates here. It goes up into this gap, gets rejected down. It goes up again, it gets rejected down again. And then for the third time, when it shows displacement towards the upside, I was for sure knew that this gap would not hold, and we would take out all of this low resistance liquidity along with the data high. Now people would be like, why didn't you wait for this 1-minute gap to be completely inverse toward the upside? Because first thing was that you at US 500 had already inversed this gap. Secondly, this gap was tested twice. And thirdly, the drawn liquidity towards the upside was strong. I had these data highs and I had this low resistance liquidity. So these were the things I just needed. And I took my trade here, put my stop loss below these lows, and just look at this. This was a beautiful trade. I closed my trade here. Didn't wait for the data high because this trade passed my funded account. I needed $50 and it perfectly gave me $50, and I passed my funded account. So this was it. This was a beautiful trade I took. And this was not a psychological trade. There were no emotions involved. It was a systematic trade. I waited for it and I executed on it, and it just played out beautifully. So this was it. Stay tuned for more recaps.